Welcome back to my channel, guys. Today I'm going to review the Olympus DAO and how it works and some of the metrics behind it, and whether or not you think it's something to take a look at or maybe even invest in or whatever. But so basically I studied this for a while to try to figure out a map of it. And the goal of this video is going to be to simply allow you to come up with an intuitive way of understanding it. Now, this might look complicated, but after I run through its several different scenarios and I go over it, hopefully you'll come away with an understanding of the Olympus DAO and, just try to, like maybe it'll help you understand it and, because it's an interesting experiment in DeFi, and will probably be some kind of base layer for further modifications of DAO structures in the future, et cetera, or maybe it'll adapt and have a big place. Who knows? But the goal of this is just to overgo this thing to go over this and come away help you guys understand it. Okay, so. And hopefully I got everything right based on my analysis, but I think I did, and so here we go. All right, so the Olympus DAO is, what is it doing? The token is, it aims to be something like a store of value, like gold or something that, not even a store of value, but something that is a reserve currency, so to speak. That's what it says, And that is a token that is like a dollar. It's a stable token that you can use to buy things, to do things with, but over time will go up in value. That is in a general sense what the token, the OHM token, aims to do, is be something that accumulates value over time. Most stable currencies like dollars, etc., we know they go down because there's irresponsible behavior with how that behaves. But this is a protocol that is transparent, and so its monetary policy can be observed, and we can see how the token will accumulate value. So the token or the DAO has mechanisms to accumulate value. Basically has incentives, and its incentives are reward APY. So basically, if you take tokens off the market and stake them in the protocol, you will get rewarded for this activity. Someone who is not selling, someone who is holding, gets rewarded in APY tokens. There is someone who bonds assets to the protocol, such as liquidity or other tokens, bonds it to the protocol, and in exchange gets discounted OHM tokens. So you remember, this protocol can mint these tokens out, mint these tokens to incentivize certain behaviors. Now, if you see this thing right here, this represents the market of buy orders of sell orders for OHM and buy orders of any asset in an abstract sense. That's what this square represents. It represents, on this side, it represents the assets that are buying OHM. On this side, it represents OHM itself, which is the sell side of the buy orders. And this is the liquidity. And then the final incentive that it has is the protocol itself and the general behaviors that the protocol runs through. Now, the reason I was going over this, what this general thing here is, you can see this, all these things are generally the DAO and how they interact with things like the liquidity and how they interact with things like the market and how they interact with things like the price, etc. All right, so hopefully I'm going to run through some scenarios here so that we can understand how this protocol behaves through time, as we have change in time. These are the flow, like I tried to come up with a good chart for the flow of how funds, how things, incentives, how value, etc. could flow through this chart. So let me just go here. All right, so I guess I'll use blue or something like that. Okay, so let's start from a certain location. So we're going to start with rewards APY. So let's say the incentives for that can be bad or good, to the market. So if the rewards are high, it's a green activity, it's incentive for the market. to go ahead and you can see this RA, which is rewards APY. That's what this RA stands for. And if the rewards go up, we expect bullish activity. If the rewards go down, we expect negative activity for the market. It influences the market here. The market, you can see this little gap here. This is where we appear here. The market pulls assets from the protocol or adds. So basically, if the rewards are high, the market will pull OHM off the market. That's what this negative over here represents. This on this side, this negative right here represents that if the rewards are high, the market will pull OHMs off the market and stake it. Okay? If the rewards go down, the opposite will happen, and we will see OHM taken out of stake and go back into the market. Okay? So far, that's where we're at. If the market stakes, the reward, you can see I put RA, rewards rates, this is downstream. If there's stake, the price should show reciprocal activity. It should influence price. That if the rewards go up, we expect the price to go up because more people are staking, more people are buying it, and this is a factor that influences price. Okay, and ultimately that's one of the things that our aim is to do. Okay, so that is the downstream of the rewards APY. Okay, now before I go into the other incentives, I want to go over in this mechanism that there is a feedback loop. Right here, you can see this right here is a feedback loop. Okay, and what that feedback loop is if the market gets excited about something, the price can cause the bond rates, or actually, let me go back over the bond rates because I'll just go over all the incentives so we can understand those things, and then I'll go over this feedback loop right here. And then I'll go over some other components. And I know this seems complicated, and it kind of is. But my goal here is just, like this system is many different interrelationship components, and what will be emergent is up for you to decide. What do you think is going to emerge out of this? I'm simply going over scenarios. I'm simply going over the thought processes and the interrelationships of this DAO. Okay, so we already went off this. So the other incentive thing that this protocol has is bond rates. So that is they can sell it can sell OHM token in exchange for assets to the market. And what that does is it allows for, one of the things that the protocol aims to do is own the liquidity in the protocol, to own its own liquidity. Now, this video requires that you understand what I'm talking about. You will not understand this video if you don't understand what liquidity is, if you don't understand what liquidity pools are. I highly suggest you check that subject out and understand what automatic market makers is and what the Uniswap or DEXs use to have liquidity. But suggesting that you do, the use of bond rates helps the protocol acquire its own control of liquidity, which means that the protocol on DEXs will control this, will control the assets and the OHM itself. The pool, the liquidity pool, will be controlled by the protocol. And that makes a revenue source for the protocol. All right, let me pull this stuff out. All right, so now that we understand that, the bond rates, going downstream from the bond rates, they influence the market to be, engaged in so the bond rates can do several things. I'll go down several of those paths. But okay, so the market's selling bonds can allow for the protocol to acquire the liquidity, right? And there's fees that are generated from that go to the treasury. So that's one of the income sources for this protocol. And the protocol, here it is. This is what I was looking for. This is why I was getting confused. This is the bond rates, and we're going to go downstream bond rates to see how they influence the market. So here's the other portal, so to speak, to how it affects the market. So it's the bond rates, right? Let me go back to the bond rates. We're going to go downstream from bond rates, right? So the bond rates influence the market to subtract or add assets to the protocol. When we add assets to the protocol, it's literally creating buy-side control to the buy-side of the protocol. So higher bond rates, higher rates encourage people to put assets into the protocol and create buy-side for this token. And I'm going to go over, like once again, I'm going to just mentioning generally how this thing is a general feedback loop in the upside and the downside. And then there's activity to try to guide it upwards consistently. But so far, that's where we're at. Okay, so the bond rates can help influence. You can see right here, bond rates. You can see how it feeds into the feedback loop. And the bond rates are one of the key components that lead to that, as well as the reward APY. Those are things that can help feed this feedback loop. But I'm still not going to, or I guess I might be at a point where I'm ready to go over the feedback loop. Yeah, I'll go over that feedback loop now. Okay, so you can see how the bond rates and the reward APY can influence price by encouraging the market to do certain things. The rewards APY can encourage the market to do certain things, which is stake, and that influences price. And the bond rates can encourage the market to do things like trade or add assets to the protocol. Okay, just to summarize what we've covered so far. Now, once price gets going in a down direction or up direction, price allows for there to be that huge return. So if the price goes up and the market's getting excited, there will automatically be high return rates for the bond rates just from change in market position. That means more fees will go to the treasury, and also the feedback loop will continue, and it feeds back to price again. So it's like a little feedback loop, and it feeds back and feeds back and feeds back until the market's satiated to some level. And it works in the same way with negative price. So if the price goes down for whatever reason, there's some excitement lost, the bond rates go down, and it leads to assets being pulled from the protocol because there's less profit, and bonders will pull assets out of the protocol if that's more profitable to them than the OHM token, which leads to more negative price, which also leads to less buy-side activity on the liquidity. Okay? So that is the feedback loop component of this, which amplifies price swings. The price swings will swing up, swing down, swing up, swing down because of this feedback mechanism. And you can see how reward APYs and bond rates, these are things controlled by the protocol trying to stimulate it in the upward direction. And this is through time, obviously, All right, and lastly, the protocol behavior, can change things, etc. All right, so let me go down. I'm going to go further down. I'm going to go into how the treasury is going to accumulate wealth, accumulate value to back the OHM token over time so that hopefully the OHM token keeps accumulating a floor price, which is one of the things of this protocol, is that the protocol has a floor price. The price can trade above this floor price, but if the price goes down below the floor price, which is the assets that back the token, this is the assets, right, value. If the price goes below the asset value price, it's a floor. It will never go below this because the protocol has enough assets to purchase all the tokens. So it'll never go below the assets controlled by the protocol because it will literally use those assets to buy all the tokens. So that is the floor price. And so as this protocol accumulates assets, the token it's not theoretical. It will rise in value as it accumulates assets into the protocol because it's the assets that make it to where the protocol the token cannot be sold or will not be sold through incentives lower than the amount of assets on hand, because that makes no sense for people to sell it for less than it's worth because it's backed by these assets. So that's how it accumulates value over time, is by assets flowing into the treasury, which back the token. So the things that cause the treasury to accumulate value are, you can see these green arrows right here, these things that lead to value going into the treasury. Now, what are these things? Well, bond activity, people buying and selling bonds. The activity of buying and selling bonds has some fees associated with it, which leads to funds going to treasury. There is also just general activity. So the bond rates can encourage engagement in the protocol. That's what that is. Just general activity in the protocol just encourage the market to be engaged. This protocol gets funds from it being traded. It gets funds from people being engaged with it, people being excited about it. Just having attention generates revenue for the protocol because it's being traded, because it owns the liquidity. Let's keep that in mind. It uses the bonds to acquire the liquidity. So it owns the liquidity so that when people are trading and excited about it, or when people are just trading, it generates revenues for the treasury. Okay, so once again, downstream from the bond rates, it influences the market to be engaged, which causes the engagement to have trade activity. The trade activity has fees from trading on those DEXs, which those fees go to the treasury. And the bond rates themselves has fees, and that leads to assets that are permanently added to the buy side of the protocol, or just held in treasury and hold the floor to the protocol. It adds to the buy side support of the constant accumulation of value of the protocol. These are all the things that reflect why it should go up over time, theoretically. The protocol also, just in a general sense, eliminates free floating ohm because it's not in the stake pool. And what that means is it shrinks in number or sell side ratio to tokens that are staked or in the liquidity owned by the protocol. And so that protocol influences people to stake, actively stake, or for the protocol to own the own token. So the protocol aims to own all the liquidity, which is an interesting concept. And the stakers control the governance, which seeks profit-seeking activities, which lead to profit going more to the treasury from profit activities of the DAO. This is just general services provided that will lead to funds going to the treasury. So that's another source of income, is from governance making partnerships or making activities that will, be profitable for the DAO. Because it's like, this DAO is a decentralized autonomous organization. It's people collaborating together to work together. All right, so hopefully I didn't make things more confusing. I might have helped you understand it. I don't know. But for me, I had to go through all the paperwork. I had to look through their stuff. And this is the model I came up with. This is my understanding of it. And, whenever you have something that's interrelationships, like there's interrelationships that influence each other and there's feedback loops, it can look complicated like this might look. And that's just like organisms. I used to study biotech, so it's, down my field. And I like the idea of modeling software. Hopefully I can come up with better models in the future, than these drawings. But from now, this visual, hopefully this helps you come away with an understanding of what ohm is and whether or not you think it'll reach the desired effect of just having price appreciation, or not price appreciation. The token is going to go down in price, but the value of stakers, will go up from accumulating value in the treasury. Whether or not you think that's going to happen is up to you to decide, but this is the model as to my understanding. And the way they describe it is they say it's simple game theory, that the best activity when interacting with the protocol falls on the null, which is everyone staking. And if everyone stakes, the token goes up in value and more activity happens and it accumulates value and it becomes like a black hole accumulating value over time. All right, so hopefully I help you come away with a better understanding of this, but this is my understanding of it, and I personally think that it's an interesting project. I think that this might be something that's going to grow in the future, and these kind of interesting structures might get more things added to them, more game theories added to them. They're probably going to get more complex over time. And it might even reach a point where, like an individual like me won't even be able to understand it. It'll be people that have full on, like, dedicate their life to just studying DAOs, because this is going to get more complicated. Like DAOs are going to get more complicated. And I think that we're just at the beginning stages of where these things are probably going to go in the future. But for now, that is the Olympus DAO, and that is my understanding of it so far. Okay, guys, if you like this kind of content, please like and subscribe. Hopefully I helped you understand it. It took me some time to get a grip on it, and hopefully I represented it accurately. And, hopefully I provided some value here. But if you like this kind of content, please like and subscribe. And I look forward to doing more investigative work in the future and bringing more clarity to these markets, these crypto markets.